Welcome to the Beyond Wealth Advisors Economic Update. I'm John Cleaver, financial advisor, and with me this month is Kelly Manning.
Hello, John.
Good morning. How are you this day?
I'm doing great. Surprised that we're in the middle of February.
Yes, 2025 is off to a busy start already. And speaking of which, let's just jump right in because there's a lot going on in the world of economics. And we're going to spend a little time today talking about tariffs and if they've changed our outlook on the market. And let's just start basic because we don't want to assume anything. So certainly tariffs have been all over the news lately. So Kelly, what exactly is a tariff?
Easy answer.
Okay.
By definition, a tariff is a tax. It's a tax levied by the government of one country on goods and services imported from another.
Okay.
Pretty simple what a tariff is. But the tariffs are usually expressed as a percentage of the value of that imported good.
Sure.
As we have seen, the percentage can be very wide,
Yes.
and it's at the discretion of the government. And now we're learning about reciprocal tariffs.
Sure. Yeah. So, we've learned a lot since the first of the year, or maybe since the election, about tariffs. So, okay, so that's good to know. But who actually has the authority to enact tariffs in the United States?
You're giving me the easy question.
Yeah, sure.
So that answer is the U.S. Constitution.
Right.
The Constitution empowers Congress to set the import tariffs.
Okay.
So Congress has partially delegated this power to the president.
Sure.
But in the current situation, President Trump invoked the International Economic Emergency Powers Act, which is a 1977 federal statute that grants the president extensive powers to address national emergencies to enact tariffs.
Wow, that's good to know. I was not aware of that.
Yeah.
So,
But let me ask you a question, John.
okay.
Who pays for the tariffs?
Oh, wow. Well, on the surface, that sounds like a really easy question to answer, but it's a little more complex. So technically, under the law, of course, the importers of the goods are responsible for paying the tariff. Seems simple, seems basic. But of course, we know that that's likely to get passed down through the supply chain, ultimately ending up with the consumer. And that's what we've been hearing about in the news most recently. So at the end of the day, the consumer could potentially pay for tariffs through higher priced goods or services. And of course, that's the concern that many people have is, hey, is this going to cost me more if these tariffs are enacted? So I guess the next question then is, well, why would we use tariffs? What's the purpose?
Well, there are three main reasons that you would invoke tariffs. The first is to raise revenue.
Sure.
The second is to protect the domestic industries. And then the last is to exert political leverage over the other country.
Well, we've certainly heard that in the news lately, and
Correct.
kind of the back and forth of what could potentially happen. So let's transition a little bit, right? So how do tariffs impact markets? And the short answer is
it depends.
So what does it depend on? Well, how long are the tariffs going to last? Does it lead to a wider trade war? Do we have this reciprocation? And, how does that impact, our relationships with other countries? And, it kind of goes on and on and on from there. There are a couple things that we do know that are very clear. One, the tariffs introduce uncertainty into the markets. We know that the markets don't like uncertainty. And in this case, we're talking about the global markets. And number two, they can restrict free trade. And of course, that can have an impact as well. So, maybe transitioning a little bit, does this change how we think about 2025 or our impact on this year?
Thank you for the easy question, because the answer is no. We accounted for an increase in tariffs as we made the projections for the year.
Sure.
So we're very much in agreement with Raymond James that the tariffs this time will likely be more than the first Trump administration, but less than the dramatic levels that have recently been threatened.
Right. Yeah, we've certainly seen that already, right? Where something gets threatened and then it gets kind of back down, and who knows where that's, it's changing almost daily.
So John, I got a question for you.
Okay.
So, with the global central banks, including the U.S. Federal Reserve, contending with potential trade wars, will this have a negative effect on inflation and, consequently, global growth?
Wow, you get all the easy ones and then you throw me this one. So let me get this straight. So by negative impact, you mean higher inflation?
Correct.
Okay. So kind of a game of if then, right? So if the tariffs trigger higher inflation, then the Fed's going to have to make a decision, right? Do they ignore that higher inflation for a short period of time and just see if the economic activity will kind of weaken meaningfully on its own? Or if the economic impact on inflation is, let's say, nominal or maybe not at all, well, the Fed still hasn't met their inflation mandate of 2%. We know it's roughly around 3%, depending on who you ask and what day. So if inflation continues to persist, then the Fed's going to have to decide, well, we probably can't lower interest rates because that could continue to spike inflation. So what do? So that's really not a great answer other than we got to see what happens. And at this point, it's really probably too early to know. We need to let this play out a little bit. It's very difficult to predict the outcome because we're still on the front edge of this.
What we're learning is that the recent tariff threats remind us of headline risk.
Right.
We're watching the news, we're getting concerned about the situation. And what we need to be careful of is the response of perceived risk or perceived opportunities. Right. So our suggestion is always going to be to avoid overreacting and making significant changes to your portfolio based on what you're hearing on the news or what you're reading online.
Yeah.
So
I was going to say there certainly is a lot of chatter. You can't really get away from it, right? It's pretty much everywhere. And the landscape's changing. I mean, almost daily we're getting some new piece of news and it's certainly easy to react or overreact or knee-jerk react to that news. And I think the concern there is, well, what's the unintended consequence of that type of reaction? And certainly when you're taking a long-term approach to investing, we're not trying to time the market. We're focused on those longer-term goals. So what advice would you give in this situation?
My advice is stay the course. It's important to be measured in your approach and committed to your long-term goals. Right. You kind of have to let those short-term situations, we may make some changes.
Sure.
But for the most part, we've got to look forward.
Right. Yeah. Not being swayed by that short-term market volatility is so tempting. But at the end of the day, that's not the objective that we have and how we certainly spend our time building out our strategies. So, well, we know it's going to be a volatile year. Right?
It is. It's going to be a really volatile year.
Go ahead. No, I was just going to say, I mean, we kind of expected that. It's certainly been a real possibility. New administration, lots of new things happening. Just continue to remind our clients to focus on the fundamentals, right? And we believe there's opportunity for growth. That opportunity might come a little bit slower than maybe past, particularly last year. But we believe there certainly is opportunity in this market for growth and just staying focused on the right things. So,
absolutely.
All right. Well, with that, we're going to wrap up the February economic update. We certainly want to remind you it's always a great time to get with your financial advisor. And certainly when there's noise, there's things going on in the world, and you're not sure how that's impacting your situation, reach out, give us a call, make sure that you're having that conversation.
Absolutely.
And, tax season is around the corner. Another great reason to just make sure you've got things set up the way you want them going forward. So with that, we say thank you for tuning in. We look forward to having you back next month, and have a great day.
Have a great day.